Hello, this presentation is about the Celadon scandal presented by Josh Clark and Kyle Malley. Celadon Group Incorporated is a United States-based company truckload freight transportation provider. Through its subsidiaries, the company provides long-haul, regional, local, dedicated, intermodal, temperature-protected, and expedited freight services across the United States, Canada, and Mexico. Celadon was founded in 1985 by Steve Russell. Before leading Celadon, Russell was Director of Advanced Production Planning for Ford Motors Corporation. He was also the Chief Financial Officer for RCA Corporation and President of Hertz Truck and Equipment Corporation. Celadon began its operations as a small dry van carrier with just 50 leased trucks and 100 leased trailers. This company grew to become one of the first U.S.-based trucking companies to take trailers into Mexico and is considered a pioneer in the commerce trail between U.S. and Mexico. At the date of its shutdown, Celadon was operating a fleet of approximately 3,300 tractors and 10,000 trailers with nearly 4,000 employees. The leadership that makes up Celadon is comprised of Kenneth Corr, who is the Vice President and Secretary, Jonathan Russell, who is President and Chief Operating Officer, Vincent Donargo, who is the Executive Vice President, Chief Accounting Officer, and the Chief Financial Officer. Paul C. Svinland is the Director and Chief Executive Officer. Thorne Albrecht is the Chief Commercial Officer and Chief Strategy Officer. And William Meek is the former COO, and Bobby Peevler is the former CFO of the company as well. On Thursday, December 5th, 2019, former COO William Meek and CFO Bobby Peevler were arrested on 9 counts each that included conspiracy to commit wire and securities fraud, and conspiracy to make false statements to the company's accountants and falsify records. Peevler is also facing 2 additional counts of making false statements to the company's accountant. They parted ways with the company in May 2017. A week after the indictment, Celadon Group announced the Chapter 11 filing for bankruptcy and the shutdown of all its business operations effective immediately. The indictment alleges Meek, Peevler, and others at the company knew by 2016 that a substantial portion of Celadon's fleet had declined in value by tens of millions of dollars due to a slowdown in the market of trucking, as well as mechanical problems and age. Investigators said the 2 men devised a scheme to conceal millions of dollars in losses from shareholders and banks by inflating invoices of older, used trucks that they traded for new ones, selling trucks to a dealer near the end of the fiscal quarter without disclosing that one of the company's divisions had agreed to pay the dealer back after the quarter ended, and making false and misleading statements to auditors about the transactions. Peevler also accused of directing a senior executive to delete certain emails after auditors requested relevant documents, prosecutors are stating. In May 2017, Celadon announced its financial statements for the fiscal year of 2016, and the following 2 quarters could no longer be relied on, nor could reports from its independent auditor for those time periods. The company's share price plummeted as a result, causing a one-day loss of $62.3 million to Celadon's market value.
Unfortunately, some fraud can manage to go undetected for years or even decades. Luckily, in the case of Celadon, they were caught the year the fraud was committed thanks to the vigilance of BKD LLP, the external auditor who was assigned to Celadon in 2016. BKD sensed something was off and began scrutinizing the fraudulent transactions that led to Celadon's demise. That is not to say Celadon went down without a fight. Multiple members of Celadon's management presented a memorandum that was falsely claiming the trucks involved in the transactions were, in fact, purchased and sold at the fair market value. In fact, you can even see it in their 10-K, which is published on the SEC's website. So it's under the leased revenue equipment held for sale. I quote, "Leased revenue equipment held for sale is recorded at the lower of carrying value and fair market value less cost to sell. Leased revenue equipment held for sale is depreciated during months the assets are under leases. The majority of the assets included in leased revenue equipment held for sale were required to be sold, and those assets have been recorded at cost. Management has a plan to sell these leased assets in their current condition to third-party financing parties and is currently marketing these units at a reasonable price compared to their fair value. The sale is probable within 1 year." BKD began scrutinizing these fraudulent transactions. In December of 2016, a post by investor Jay Yoon on the website Seeking Alpha questioned the fraudulent trades regarding the inflated trucks. He claimed to have been tipped off to these transactions and had filed a whistleblower complaint with the SEC. Despite Celadon's efforts to mislead BKD, as well as deletion of incriminating emails, they were not fooled. BKD ended up withdrawing their audit opinion for certain Celadon financial statements. This caused Celadon's stock price to plummet, resulting in losses of tens of millions of dollars to investors. Eventually, the PCAOB was even involved and requested documents related to the truck trades. Ultimately, many factors contributed to Celadon's failures and the auditor's success in exposing these corrupt transactions. The primary factor was efficient and thorough auditing standards that allowed BKD to detect the fraud. Continuing involvement with members outside of the external auditors, such as the whistleblowing with the SEC, was a cherry on top to eventually charge Meek and Peevler.